Never mind bearish performance in the stock market. There's always a bull market somewhere. And energy is the place to be. It's still the number one performing S&P 500 industry sector with strong positive year-to-date gains. And today's audience requested ETF battle is a triple header between energy-focused ETFs from Invesco, State Street Global, and Vanguard. So which energy ETF wins? Find out right after this. This is ETF Battles. I'm Ron DeLegge. It's good to see you again. Thank you for being here. Now, the ETF matchups that we do on this program come from you, the audience. So if there's a certain ETF contest that you'd like to see, send us your ticker symbols in the comment section below or on our Twitter feed at ETF Guide. If we choose your battle, you win your choice of an ETF Battles coffee mug or a shirt. Also, if you see a battle suggestion from another viewer that you like, hit the like button for that battle suggestion, and that'll tell us what you, our audience, want to see. Be sure to visit the description section below. We've got links to our program sponsor, Direction Investments, and we've also got online resources for our viewers, including our margin of safety investing tool. Just visit the description section below. Today's ETF Showdown was requested by Ronnie M90. Energy's been a great trade in 2022. And he wanted to see this matchup with ticker symbol RYE from Invesco going up against XLE from State Street Global and VDE from Vanguard. So Ronnie, thank you so much for your outstanding battle request. Be sure to visit the description section below to claim your prize. Judging today's contest is an illustrious duo. We've got Cinthia Murphy with the ETF Think Tank and Tom Psarofagis with Bloomberg. Great to see both of you, judges. Welcome back.
Hey, guys. Always great to be here.
Great to be back. Thanks, Ron.
So our four battle categories are cost, exposure strategy, performance, and then our mystery category. For mystery, that's where you, our judges, can choose any factor or thing that you feel is crucial to today's contest. Our judges can also nominate wildcard ETFs if they feel there's better choices elsewhere. They can also opt for split decisions. It's up to them. I've got the scorekeeping duties, and at the end of the show, we'll declare an overall battle winner. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. So let's kick things off with Cinthia. Sisters before misters. Get us started on cost, Cinthia.
Well, this is a shocker. So stop the presses. The winner in cost is Vanguard. So VDE costs 10 basis points versus the Sector SPDR XLE, which is 12, versus the Invesco RYE, which is 40. So no surprise there. It's, Vanguard always hits that cheapest button, or it likes to do that. And VDE wins here. Of course, that it depends on application. If you're investing in these ETFs as a trading tool, nothing comes even close to the liquidity and all the action you get in a next sector SPDR like XLE. So if that's important to you for your overall cost, then you might want to, those 2 extra basis points may be worth it. But on just a face value expense ratio, VDE is the winner here.
Thank you, Cinthia. Tom, you're up next. How do you see it in terms of cost?
All great points. They're really close. I'm going to go with XLE only because in terms of total cost, especially with the sector products, they tend to be traded a lot. And XLE here has a big advantage over Vanguard and over the Invesco one. So when I like to look at it holistically, I think, again, it all depends, right? I don't know how many times you're going to trade this thing, but I like that there is a lot of on-screen liquidity in XLE, and when you factor in transaction costs, I think that would edge out. So I'll actually go another route than Cinthia, and I'll pick XLE on the cost front. Exposure
strategy is the next category. Tom, you're still up. Give us your analysis.
They're so close, this makes it so much more difficult. When you look at RYE, the Invesco one, and State Street, they're only using S&P 500 companies, energy companies. So there's not all that money. There's only about 20 or so something companies that you could do, that you can put in there. Now, the big thing is XLE is market cap weighted. So you're really getting a lot of Exxon, a lot of Chevron. You're talking about 30+% of your portfolio is in those 2 names alone. I like RYE's approach in that it's equal weighting everything, right? So every company's having the same amount of say. Vanguard, it uses a different index, it's MSCI. It's a little bit more inclusive, so it does tilt a little bit more mid cap, a little bit more small cap, but I found that doesn't really seem to matter all that much because it's also market cap weighting. So you're getting a lot of Exxon, a lot of Chevron in that. Even though the average market cap is a little bit lower in VDE, I would think over the exposure, I like RYE for the fact that it's equal weighted, because really XLE is pretty much just an Exxon and a Chevron bet. So if you're looking for something a little bit more diversified, RYE here wins with its equal weight approach. So I'll give even though, again, there's not a whole lot you can do with it, but I like that it's equal weighted. So RYE for exposure strategy.
Thank you, Tom. Cinthia, you're up next. How do you see it in terms of exposure strategy?
I love this because it's a great question. They are so similar, they're just different enough. It really comes down to personal choice on what you're trying to do. Is diversification important to you? Are you just really trying to capture the big integrated companies, the Exxon and Chevrons? Do you want to, dilute your bet and go equal weighted? So really the winner is, everybody probably has a different one. So it's a matter of use case more than anything else. All else equal, I like the fact that the VDE has more holdings. So if you are nervous about that concentration bet, but you also don't want to completely give up the leadership of the big names in a year like this year, then VDE gives you just a little bit more diversification punch without really diluting too much the leading names that we've seen this year. But it's definitely a timing perspective. It's, based on what's working this year. So maybe VDE, but that's a very more mixed bag than anything, if we're going to be honest.
Okay, so VDE, it sounds to me like that's your choice with a narrow victory. Great points. Thank you, Cinthia. Now we move to performance. Performance is where things really get interesting. So Cinthia, give us, please, your analysis.
So actually, I am in the mixed bag battle today because the performance isn't that dramatic either. I mean, equal weighted has underperformed, which makes sense in a market where only energy is working. So when you have the really strong sector leadership, an equal weighting portfolio is going to typically underperform. But if you go historically and look at different years, when markets are different and energy was really struggling, the equal weighting approach really worked. So, I think I would give kind of like a split decision here for XLE VDE, just for the near term. If you really wanted to have captured the performance we got this year, those would be the vehicles to do it, more so than RYE.
Tom, you're up next. In terms of performance, do you agree with Cynthia's analysis?
Yeah, I do. It's all good points. Obviously, your time horizon is really important here because, let's say, like on a 3-year, RYE looks great. It's better than everyone. As you start to go a little bit further out, 5-year, 10-year, it really starts to lag behind. So having that, so the thing with VDE and RYE, since it's equal weight, it's going to have a little bit of a small cap tilt. So does VDE. That's actually hurt it over the long run. So to Cynthia's point, sort of the market leadership, Exxon and Chevron have led that. That's come out in the performance. So XLE is my pick for the performance winner. But again, it really matters if you then thinking that small caps might come back or sensitivity to the dollar, the other ones might make a little bit more sense. But over the long term, it's really hard to argue with XLE's performance. So I'd give that one to XLE.
Next up is the mystery battle category. This is where our judges can pick a single factor or multiple factors that they think are important and pertinent to this contest. So Tom, what is your mystery battle category, and which of these 3 ETFs wins it?
Sure. So let's talk about something relevant. Yield, right, and income. They're all pretty high, which has been nice for energy. XLE, on top of its performance, its liquidity, actually pays out a little bit of a nicer yield too. And VDE will be very close to it because some of those bigger names pay out some pretty nice yield. So it actually does have a little bit of a better yield kicker as well. So my mystery category being yield, I actually go to XLE as well.
Thank you, Tom. Cinthia, you're up next. What is your mystery battle category and who wins it?
I love your mystery category because it's so simple and logical. I have really struggled with this mystery category today because these funds are so similar, and I'm like, what really makes sense here? So I was just thinking in terms of looking ahead. So what's the energy story looking ahead? And unfortunately, there's no consensus either there. So I was looking at the EIA, for example, and all the forecasts, and for the October to March should be really strong time for natural gas prices. So is there more upside there? But then for next year, they see a softening in that market. Oil, a similar situation. Electricity is going to be, today is very heavily dependent on natural gas. But starting next year, they're seeing more solar and wind being big sources of electricity generation. So, from what role energy plays in your portfolio, if you're looking ahead, where is that opportunity set? And in the absence of a consensus, I would say stay diversified. So from the three we have, I would go with VDE or RYE, just in the sense of we don't know what the leading energy story is going to be and how long the current story is going to last. Or maybe look at the next generation of energy. So an ETF like RENW, for example, which is really like a commodities basket, but it's all of the renewable energy, the next energy phase, and invest in a lot of the names, a lot of the products that are going to be important in the energy transition story, or even 10, solar energy. So I think I don't even know how to phrase my mystery category other than to say, looking ahead, what's the story that you're really bullish on? If you are not sure, I would choose diversification. So I would go VDE. If you are sure that the energy transition and the green energy and all that is the next step, then I would look at something like RNW or even 10, which is a classic.
Our judges are bringing it today. I've been enjoying this analysis, but the question is, how is this particular battle going to shake down? Let's give our judges one final opportunity to weigh in with their overall battle winner. Cinthia, give it to us.
Yeah, so I don't envy your job, Ron, because you got to announce the winner. It's a tough one today. At least it was tough for me. Overall, I personally, the way I invest my money is very long-term thinking, very buy and hold, really stick with your themes for a long time. So I like VDE for that. I like the extra number of holdings there. I like the more diluted concentration without giving up some of the leadership. I like the price tag, and I like that it's not too small. It's also not too big. So if you're not going to be getting in and out of that fund, it's a good size, has good liquidity. So I would give it to VDE unless you want to go renewable energy for the next growth phase.
Tom, your final chance to weigh in with your overall battle winner.
So overall, I like XLE, but I'm going to throw in a wild card too that I like to watch. But what I love about why these products have done so well. So like XLE is actually even bigger than XLK. So you have to remember now in the S&P, energy is maybe only a 5% weight. So you're not really getting a lot of energy exposure. So you have these options like these sector ETFs that so if you want energy exposure, you really have to go into one of the sector products. Now, while I do like XLE a lot, if I want to go even deeper, the one I like to look at, I will preface by saying it's pretty risky, but I think it's an interesting play, is PSCE, which is the Invesco small cap energy. Now RYE has a small cap tilt, but it's still large cap companies, right? Vanguard, VDE is still large cap, but it goes a little bit further. This is stepping completely out of that. And the only reason I like to always keep an eye on this is because I think they make some pretty interesting acquisition targets, especially what's been happening with energy. I'm always, these smaller sector ones sometimes have really interesting targets for the larger cap names. Now, the performance hasn't been as great. Small cap has definitely struggled, but I think given what's happening, maybe if we do see some M&A in the sector, this ETF could have some prime names that could be some pretty interesting targets. So just something to keep an eye on. I think if you really want to go into the depths, look at PSCE. But my overall pick is XLE. I think it's tough to fight against the big sector, select sector spiders. So my overall pick will be XLE.
Well, our judges have spoken, and according to my battle scorecard, today's winner is a split decision between XLE, which was Tom's choice, and VDE from Vanguard. That was Cynthia's choice, and our judges both made awesome points. Cinthia liking VDE for It's got more holdings, uses the MSCI index. She also did mention to keep an eye on that trend of renewable energy like wind and solar. Honorable mentions to TAN and RENW from Cinthia. Tom making his arguments in favor of XLE, and it's still the biggest energy ETF on the planet, and it's also got a focus there on the S&P 500, which amazes me. What one of the points Tom made was that energy, as good as it's done here in 2022, it still represents just 5% of the S&P 500's overall sector exposure. So that was a pretty amazing stat. Also, Tom giving us his wild card choice. If you want to play maybe a energy in a different way, look at going with the small caps, which could be M&A. That's an acronym for mergers and acquisitions. M&A targets. He threw out PSCE, tracking the small cap energy sector, a little bit more volatile. Well, actually, a lot more volatile and higher risk, but nonetheless, another way to play the energy sector. Judges, great job at breaking down today's ETF contest. We couldn't have done it without you. Keep up the good work.
Thanks for having me, Ron.
Thanks, guys. This was great.
Be sure to visit the description section below. We've got research links to our judges. And while you're there, check out the link to our program sponsor, Direction Investments. So, which ETF battles would you like to see in our next episode? Post your ticker symbols in our YouTube comment section below or hit us up on Twitter @ETF Guide. I'm Ron DeLegge. Thanks for watching. We'll see you next time.